I'm Deborah Borchardt, and this is your midday market update. Well, the markets are on fire this morning. We are soaring higher to record highs as a result of Larry Summers withdrawing his name to be a potential Federal Reserve chairman. Joining me now is Mark Newton. So Mark, we were just talking about how this is a happy occurrence for 401k holders because you see your 401k value shoot up, but not so good for traders down here because hard to position for something like this.
It's difficult because we've moved up 1% prior to the market opening ahead of a really major event this week, and it's tough to come in and know what to do. A lot of people don't feel like chasing this rally at this point. Sentiment has already gotten extremely complacent if you look at things like the equity put-to-call ratio or the VIX, which has come down substantially, and so a lot seems to be baked in at this point, hoping that we get this minor tapering of 10 to 15 billion, and anything else I think would be a real shock for stocks, where if you had nothing done at all, or if you have a more aggressive tapering or an aggressive timetable of when this would happen, that probably would be unexpected. And particularly with Summers gone in more ways than one now these days in the market, and so it's it's difficult to know exactly if Yellen is the shoe-in, given her relationship with Obama, and Obama's to some extent has had some irritation at the publicity of thinking that she's going to be the definite person to step in, and so it's tough to know what to make of that. Obviously, Yellen will be a continuation of current policy. Is that what the market really needs after 2 years of unemployment really not having come down and GDP not at levels we want? So it's more like a short-term fix for stocks, where stocks rally just on the possibility of QE just continuing indefinitely when a lot of people have argued that it's not really the right thing these days, that it's not really helping to solve the key issues.
Well, there's no guarantee that she would do that, although most of these things have been put into place. It would probably be hard for just about anyone coming in behind Bernanke to unravel them very quickly.
You're absolutely right on that, and it's tough to know exactly what the right answer is at this point. We don't seem to be getting the economic growth that we need. If you look at the retail sales data of late or the jobs data, we don't seem to be booming at a level that would justify normalization and aggressive tapering at this point. So the next Fed governor has got a very tough job, no doubt. I mean, trends are bullish right now in stocks. The short term is overbought. Intermediate trends are bullish, but you do have this waning of momentum. And historically, September has been a down month to the tune of 1%, and we're already up, almost 4% thus far, heading into one of the most widely anticipated Fed meetings of the entire year. So most people, it's just like a continuation of last week's holiday and summertime, where you come in and you don't really know what to do at this point because you don't feel like chasing. You want to buy pullbacks, and yet we're not really given anything more than just a giant rip, where 401k holders are happy, but most traders come in and say, well, what do I do now? I want to buy pullbacks. I don't want to chase this market when it's overbought like this.
All right, well, as Mark said, these guys down here are looking for a pullback. The pullback hadn't happened yet. That isn't to say it couldn't happen later this month. But for now, the market is ripping higher. That's Mark Newton from Gray Wolf, and I'm Deborah Borchardt with The Street.